Hello, this is Seewing, and today I'm going to go over the fastest growing real estate investment market in the country, which is in Central Florida. If you must know, but we will dive into the specifics of it momentarily. So with that in mind, let me share my screen and here we go. So I'm going to use two resources to provide you, and I'm going to go over the big picture, what the two resources is telling us. Then I will give you a deep dive into the area using the Google map. Then I'm going to finish up the presentation with specific investment opportunities and what type of real estate investment model it is. I'm going to go over the pro forma of a typical property available for investors to purchase so people can make an informed decision as to whether this type of investment methodology makes sense to those investors' goals and objectives. Without further ado, the first resource I'm going to use is Redfin. So let's see what Redfin has to talk about in terms of what's going on in Florida and specifically Central Florida. I'm going to start out by using the top 10 metros in the US with the fastest growing sales price according to Redfin. And among the top 10 markets on this list, 1, 2, 3, 4 of those markets are in Florida, which is in Tallahassee, Florida, Gainesville, Florida, Miami Beach, Florida, and Hollywood, Florida. These are the regions where we have seen the fastest growing sales price among the top 10 metros in the US, as reflected by Redfin website. And furthermore, I'm going to scroll down a little bit over here, and I'm going to further detail another category provided by Redfin. These the top 10 most competitive cities, top 10 areas people are moving to, as opposed to top 10 areas people are moving from. I'm going to focus on the top 10 areas where people are moving to, not only based on Redfin, but from perhaps the U-Haul and other moving websites. They show a very good data of where all the migration is going to. Follow the migration pattern, because wherever the migration pattern of the population are going, you are seeing potential job growth and population growth. Once you study this type of data, you can pretty much tell what areas to buy, especially in the area that show the data are still in affordable market, meaning if the home prices are still very affordable relative to the rent prices, that means you have very good numbers, very good rent to value ratio, very good cap rate. If an investor were to purchase in this type of market, they could be reassured that if they were to put 25% down payment, they could reasonably assure positive cash flow property. That is the foundation of a buy and hold real estate investment strategy for real estate investors. So with that said, top 10 areas people are moving to are, of course, Phoenix, Las Vegas, Miami, Tampa, Orlando, Sarasota, Cape Coral, Dallas, Texas, Sacramento, California, and Houston, Texas. Again, I'm only going to focus on Florida in today's video, and which is one, Miami, located in South Florida, of course, but that market is extremely expensive. So the numbers does not work with respect to cash flow properties. We're talking about buying low entry level cash flow properties, 25% down payment, you can achieve monthly positive cash flow. Miami clearly is not the market, so something I do not recommend, but Tampa, which is in the Gulf Coast, in the middle of the Gulf Coast, and the suburbs of Tampa beyond the area is also very affordable still. So that's one of the market where investors should target. Orlando, of course, Orlando in the middle of the Central Florida. Orlando has been in the metro, not just the city of Orlando. We're talking 50 to 60 mile radius into the suburb of Orlando. That's where the path of growth is occurring. And Sarasota is in between the Tampa metro and the Cape Coral, right in the middle of the Gulf Coast, and Southwest Florida also has been growing by leaps and bounds. So we're seeing Central Florida and the Gulf Coast section of Florida is the primary growth market associated with our housing market, which mom and pop risk investors should target. All right, so that's conclude the Redfin article. The second article I'm going to use is Adam Solution. Is a very excellent website that goes over a lot of data about the housing market. That he created a report Q1 2023 single family rental market. This report is very specific, is very focused, That's why I'm very happy to find this research website clearly give you a very narrow, focused, analytical confirmation of where risk investors should take action. I'm going to highlight the article. Rental Market Report says the report shows from 2020 to 2023, rebarrel to back rents rose more than single family housing prices in 91% of the markets analyzed. Rents, when you have very good rents from tenants that cover your rental debt obligations and expenses and you still achieve cash flow, that's a very important benchmark. Rental projection associated with the price of a home, rent to value ratio, that's critical. So rents have risen by around 5 to 20% over the past year. And I'm going to tell you where that has occurred. The top 5 counties that Adam Research has done shows the highest potential annual gross rental yields for 2023. And they are the following: Indian River County, Florida, the Sebastian Vero Beach metro area, Collier County in the Naples area, which is Southwest Florida, and Charlotte County, which is the lower Southwest in Florida, Cape Coral, Port Charlotte, North Point, and Lehigh Acres, and LaBelle, also the Punta Gorda metro area. These Florida submarkets are among the top 50 for rental returns for counties analyzed in 2023. Just so you know, this Adam report indicates that 29 of the 50 counties are located in the South and the remaining located in the Midwest and Northeast. Southeast are with the rental returns of the highest for real estate investors if you want cash flow, if you want to build a real estate portfolio. And of course, no surprise here, none of the markets are located in the West. Why? We all know why. The Western region of the U.S. shows the housing average median price very high. We're talking $500, $800, $1 million houses. You can't cash flow. The rent to value ratio does not make sense in the Western region of the U.S. 50% of the U.S. is part of the Western region. This article by Adam Solutions pretty much confirm and validate the Western region of the U.S. does not make sense in terms of real estate investors buying cash flow properties because again, rental yields does not make sense. Talking the median price range of a single family home, $600,000 to $800,000, and if the rent is only like $3,000, you see the disconnect there. Rent to value ratio does not apply. You need around either 1% rent to value ratio or 0.07%, 0.07 to 1% multiplied by the purchase price equals the gross monthly rent. That is the metric. That's the blueprint to buy properties for cash flow with 25% down payment. Does it make sense? So hopefully it does. Let me conclude this Adams research. The rental yields, that means the gross rent yields are expected to rise, especially when the home affordability are very challenging for most people because of the high housing prices and the high mortgage rate. Many people are sitting on sidelines. They cannot afford to buy houses for themselves and their family. Therefore, they have to enter the rental pool. That's where you come in as a real estate investor. You are allowing those massive renters nation, the largest renter nation in the history of the country, of the U.S., to rent. They will continue renting because they can't afford to buy their own home. There's lack of housing to rent due to the migration patterns, as I discussed, due to population growth and job growth in the areas in Florida. This means that your rental cash flow, rental income will continue to increase and to catch up with the past couple of years of skyrocketing of home prices. You must understand the rent always lags behind the skyrocketing of home prices. The future for real estate investing in the turnkey properties that I'm going to discuss very shortly is very bright as more and more people need a place to rent. There are bidding wars for renters because people moving into these Florida regions continually bodes well for real estate investors, especially mom and pop turnkey real estate investors, which I'm going to discuss when I present one of the solutions, one of the properties in this video. In conclusion, this article dated by Adam, dated first quarter 2023, single family rental market report from Adam provides valuable insights into the U.S. rental property markets, highlighting the top markets for buying single family rental properties in 2023. Of course, there are other research out there, but I'm just showing you the most important and credible resources. Real estate investors, wherever you live in the country, does not matter. You have the ability to take advantage of these data and use your hard-earned money in this challenging real estate economic environment and buy yourself one or more of these rental properties in the Florida markets. And with that in mind, I'm going to finish up my presentation with the appropriate market to buy. Isn't that cool? I'm going to show the Google map. I'm going to present to you turnkey new construction properties in Citrus Springs, Florida. Now, a lot of you have not heard of Citrus Springs, but this builder and this operation clearly right now is the path of growth markets that investors should pursue. Now, some of you are wondering, where is Citrus Springs, Florida? So let me enlarge my map. Citrus Springs are like an hour and a half north of Tampa. Tampa, a few years ago, it was good for investors to purchase. Now, prices have grown so much, whereby to rent to value yield does not make sense. So we have to buy as investors, we'll buy cheaper, affordable homes to cash flow. As you can see, Orlando is right here. Citrus Springs is an hour and a half northwest from Orlando. So let me come down here, Citrus Springs. Follow the migration pattern of the population. You will follow the job growth, the population growth, economic engine. People are migrating for a more affordability. That's what's happening. So Citrus Springs, as you can see right here, it has a population of around 25,000 people, and the numbers growing by leaps and bounds, and many people, you need to get ahead of the curve. That said, I'm going to share you a final presentation to go over a specific property that investors can purchase not only today, but throughout this year, because this builder and this organization are allowing real estate investors to purchase their new construction. Yes, home is complete and ready to close. This is one house. There are examples for investors. There are more. They're coming to you on a weekly basis, but this is an amazing property. I'm going to show you a little bit more. Here's the house in question. This property is brand new construction. It's just got finished. And of course, I'm not going to discuss the value add of a brand new constructions. This type of investment model has been proven to be very successful throughout the country in the past 20 years. And something that new construction for the past 20 years, we've been targeting in various areas of the South and Southeast, especially in Florida, with new construction. So you see the path of growth. They get in there early into a sub-market earlier than everybody else because buying at the lowest price at the beginning of the curve, at the beginning of the growth. So you get in there early and then lock yourself in on a very good purchase price. In this case, a 4-bedroom, 2-bath, 1,617 square foot. The market price is $274,000. You put 25% down payment. So total out of pocket around $68,000, and plus the closing costs and what have you. Your total out of pocket is $82,000. I know some of you don't have the amount of down payment available, but many of you do. And again, you could be located anywhere in the country. That does not matter, because this type of business model methodology, this builder and this turnkey provider have professional property management. They do everything for you. You can invest passively, remotely, turnkey, or let the professional property management help you manage this property for years and years to come, buying and hold long term. And one additional value add that can blow your mind. I know the mortgage rate right now is around 7% nationwide, and we're talking owner-occupied loans at around 7%. Investors' loans usually are slightly higher, usually 0.50 basis point higher, typically around 7.5% for 30-year fixed rate mortgage if you are a real estate investor getting investment loans. But again, by working with builders, we have not heard the past 9 months or so, the builders are providing some amazing incentives for home buyers and for investors as well. This builder work with investors. They built this new construction home in a very fast growing rental market specifically for investors. This is actually mind-boggling because they have an in-house lending, a unique mortgage reduction program. You can get a 30-year fixed rate mortgage around 4.99%. That's right, 4.99%. Read my lips. 30-year fix. This is mind-boggling. Not going to find this kind of low rate given today's environment by getting a 4.7 to 4.99% 30-year fixed mortgage to financial investment property. Such a great incentive, and that'll allow you to cash flow on a property otherwise at 7.5%. You will not be able to cash flow on these kind of properties because the gross rent, estimation of the gross rent is a little bit less than $1,800 in this market, such as Seewing, Florida. I'm not going to go through these numbers that detailed, but if you do not understand any of the numbers or some of the numbers, whatever, you can contact me and I'll be more than happy to clarify some of these numbers. These numbers are really the benchmark. So at the end of the day, based on this amazing available mortgage product, allow you to cash flow monthly almost $400. The metrics really make sense. I know this is just a projection. This is a pro forma. There's no guarantee of future results. Nobody have a crystal ball. I get it. But this builder and this turnkey provider, they have done most of the research and due diligence for you in this particular market. And they have a great track record that can help you achieve success on this long-term buy and hold market property as well. Based on the projection, all the numbers really looks good. The cash on cash return, the ROI, the whole 9 yards. So this is just, again, the monthly positive cash flow is very attractive. The amazing mortgage rate for investors are less than 5%, which is very hard to come by. So therefore, I'm not going to go over the 5-year projection. You're going to go over it yourself. The beauty of risk investing, just so you know, is long-term. You may not see a lot of movement. Numbers wise, first few years, I get it, but buy this kind of property for long-term buy and hold up to 10 years plus before you really see the amazing profitability of this type of properties. So you get cash flow and appreciation potential. Not only that, you look at the year-to-year projection, rental income or projected to grow at estimation 5%. So your cash flow will continue to grow while your renter is going to pay down your mortgage. Look at the gross rate minus your expenses and debt obligation from a year to year. You see the number changes to your benefit as a landlord or investor. Furthermore, you are locked into a 30-year fixed rate at less than 5%, then your mortgage is going to stay the same. However, your tenant going to pay down your mortgage. Therefore, your loan balance continue to decrease. And your rent going to increase, your cash flow going to increase, your appreciation at a 5% projection. So you can see equity growth over time, compounding interest, compound growth of your real estate portfolio. Very desirable cap rate, 6.4%. Very good benchmark. The market value today, below market value, by the way, I feel these new constructions perhaps 10% below their fair market value. So you get some equity bills right off the bat. As you can see, the renter is going to pay off all your debt obligations. And a typical renter is going to rent your home at least 2.5 to 3 years per tenant. These are high quality tenants that will have the money pay you for the next several years. So therefore, you're have a high quality tenant in a very good location, plus A- location, plus A- quality tenant. They're going to pay down the loan for you. Each time they pay down the loan for you, your loan to market value decreases month over month, year over year, as you can see, tremendous changes. And then studying your equity growth on a year-to-year basis, as you can see the numbers, think long-term, you will see the increasing equity value of your home as your loan balance gets paid out by the tenant, the $1,800 rent you're collecting, they're going to pay everything for you. They're going to pay your mortgage. You can outsource payments to a tenant. You're not paying the mortgage. You're not paying taxes, insurance, property management fee. The tenant will do all that for you. Your only obligation is your down payment. So sales analysis, everything else, net cash flow really makes sense, right? These are long-term buy and holds. You have to be very patient, show a lot of discipline to make this kind of long-term buy and hold strategy work for you. Here, just one example. One market, there are other markets in Central Florida, not just Citrus Springs, that I will bring to you on a weekly basis. These are target this builder and this turnkey provider. Well, you have been doing it for a very long time. They know the path of growth. They know where to strike, and investors, wherever you're located, will have the ability to do this regardless of your location. You can buy out-of-state investment. This is the business methodology. This kind of business model has been successful for years. as long as you surround yourself with a highly credible team of turnkey providers that will do the whole one-stop shop for you. Professional property management, customer service, long-term. So you can sit back, relax, and focus on things that are important to you. You don't have to manage your properties. It's done for you on a day-to-day process by the professional property manager at 48% of your rent. Hopefully, you see a lot of value from this, and I will be back to discuss similar great properties other areas of Central Florida and the Gulf Coast of Florida for some great cash flow, fast on growth, a lot of potential for appreciation and rental income, long-term buy hold situation. So anyway, if I conclude this message, I've done this for a very long time. I've been in the Florida market for several decades now. I own rental properties in Central Florida myself, so I know what's happening. With that said, if you see a lot of value to this video, please smash the like button and subscribe to my YouTube channel. I also talk about the regular housing market as well, not just investors' housing market. Also, the third thing I want to ask you to do is please quickly visit my website below and drop email into the form to subscribe to my weekly turnkey real estate investor newsletters. Once you join our free network, you will receive weekly market updates similar to what you've been getting today, investment opportunities, other markets that we have a relationship with other turnkey providers in the South and Southeast and the Midwest, not just Florida. Those Florida is personally my number one investment market for turnkey investors from out of state, wherever you are located, 2,000 miles away, 200 miles away, even if you live overseas, if you qualify and you're motivated, you have the money, qualify for loans, continue doing your research, get educated, and surround yourself with a great team you can trust for the long term, and you'll be fine. That's all I have to say. Thank you so much. This is Seewing. Thanks for watching, and I'll see you on the next video. Have a nice day. Bye-bye.